Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks Investment Research, and I am here with two more aggressive growth stocks for your radar screen. And let's get right into it. We can see the first one is up here on the screen, and it's Diodes. DIOD is the ticker. It is a Zacks rank number one, and it is a strong buy. And as just about all of these stocks that I look at here on this video, you will see that they will all have that A for growth. This one happens to have an A for value as well, something that I don't always do. I kind of like to see the divergence. I want to see a strong growth score, a weak value score that tells me I'm on the right path right away. But let's take a look at why this stock is a Zacks rank number one. So first thing I'm going to do, I'm going to say, oh my gosh, look at this earnings history. Beat, big beat. Okay, so the beats, you're consistent at 7% and then a slight downtrend there, but then back up to 13%. So that's good. We like to see that. Next thing that we like to see, earnings estimates moving up, and we can see, that beat happened in between, this time frame here, so 60 days ago. So we see the number going from 67 cents to 75 cents. That's up. Here we see 71 to 80 cents. That's up. Here's the big move here, 250 to 280. That's up. And next year, no visibility just yet, but we see the number being installed here at 290. So minimal earnings growth here on a year-over-year basis. We like to see that. That is good. Let's take a look at the valuation here, and I think this is what is going to turn a lot of people onto this stock. Even though it's got that A for growth, we're only seeing about a 10% annual top line there, but that could be a little bit of seasonality involved in there. But the forward multiple here, 12 times for a chip company, is really good. 1.7 times book is really good. That puts it really firmly in that value camp. If you're looking for that chip stock, you don't want to pay a lot for it. This is definitely one. Now, here's the big thing. You can see a big turnaround here in margins. We'll just start with operating margins. They were a little bit move here to here is a little bit, and then up. But boy, look at this net margin right here. This goes from 3 to 8 to 9 over the last few quarters. When you see things like that, where more money is dropping to the bottom line, you're going to have good things happen in your stock price. Now, this is a chip name, so we're going to have a lot of headline-driven activity on this stock. So, but boy, if we just take a look here, this is the last miss right here, and this looks like the beginning of 2017. So, beat, lots of beats, beat street, as we like to say there. But the trend is good, but we do have a lot of herky-jerky movement up and down. But for the most part, looking good here. Obviously, the estimates, this is why we look at this. The estimates keep on driving this stock higher. If the headlines start to work for this name, if we get that China deal, this is a stock that is going to reach new highs, and we can see that looks like 42 or so. So the mid 40s, I wouldn't be too surprised that, and this is going to be a big call here, that we see something like $50 a share on this thing if we get a good China deal coming out. All right, let's move on to the next one, and we're going to stay in the wild world of chips. And this one is a little bit smaller of a name, but just as interesting. And it's Lattice Semiconductor, and it's LSCC for the ticker. It is a Zacks rank number one strong buy. It has that A for growth, but that F for value. And a lot of people are going to say, boy, why would you want to have an F for value? Well, that tells me right away this is a growth name. It's about the growth, and growth investors pay up for the growth. And when the growth comes there, it's just going to keep on working. As long as there's still growth, there's going to be more investors that are going to get a hold of this name, see this stock, and we're going to profile it here. Why are they looking at this name? Why do they like this? Well, the first thing is we see here lots of beats. Big beat, a meet. and then a big beat. But your average surprise here is 33%. And obviously a lot of that's driven by that big 100% beat about a year ago, and we're coming up on the anniversary of that. So maybe another big quarter is in the offing. But we can see estimates are moving up here for this quarter, for next quarter, for the full year, and for next year. So there is good visibility that things are moving up. And the most recent, on the last conference call for this stock, I happened to overhear they're saying that demand was very solid and they weren't that afraid of any slowdown coming because of the China deal. So let's take a look at the valuation, and you can see that this is a lot different. Oh boy, than this is a lot different than the last stock here. So we got a 28 times forward PE. Growth is, for this quarter, but that could be a seasonality issue again. But here we see operating margins doubling. I mean, that is what you really want to see over the last couple quarters, 5% to 10%. Net margin, oh boy, not what we want to see, but and that's what's going to cause the problem with the value there. But when we see the operating margin looking that good things are in the offing. Let's take a look at the chart real quick, and we can see that things really kicked into gear here, and boy, they are moving up. And especially if we look at these estimates are on a really high vertical there. So if this stock continues, if we get a China deal again, chip stocks continue to look good, this stock could easily trade $18, and I'm putting that 18 up there. And with the stock right around 13, that's a big percentage move as well. So keep this stock, Lattice Semiconductor, LSCC. Let me move that up so you can see it here. LSCC. Keep that one on your aggressive growth radar. That's it for this week. Be sure to join us next time when we take a look at 2 more aggressive growth stocks for your aggressive growth radar screen.